Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from Denver, Colorado today. Pleased to be joined by fellow coach and my friend Brent Moores. Good morning, Brent. It's good to see you. How are things?
I'm glad to be on here, Kevin. I've been out the last couple Wednesdays, so this is something I've missed, and glad to talk about the markets with you and be with everybody who's watching today.
Yeah, I'm glad to have you back, obviously. We've got plenty to cover. We had a pretty great start to the week yesterday, all
Good.
things considered. We had maybe on late last week some fear created out of the administration that got alleviated rather quickly, walked back on some tariff discussions. And the market, of course, loves the walk back move, regardless of what put us into a difficult or hairy situation nonetheless. Market had a great day yesterday. So we're going to look at a bunch of charts with all of you. Say hi to our friend Barb Armstrong there in the chat. She's going to keep an eye on you, make sure you're all within reason, behaving yourselves. Lots of familiar faces out there and familiar names. Thanks for being here this morning, everybody. If you're not already doing so, take a minute and follow the three of us on X: Kevin Horner CS, Brent Moores CS, and Barbara Armstrong. No, it is at Barb Armstrong CS. It's been a minute, Brent, since I've had to run through all my details. I'm sorry. I'll make sure I get this all down for you, everybody. And of course, lastly, please make sure you're subscribed to the Schwab YouTube coaching channel. All right, let's get into the good stuff here. Let's cover our nuts and bolts with disclosures, and then we'll get into the good charts, obviously. So remember that our conversation is exclusively for your information and for your education. We do not make recommendations here. We do not endorse or recommend a specific approach to trading the market. We do, however, discuss technical analysis quite a bit, and in so doing, we want to remind you to think of that as a complementary viewpoint to the fundamental research that you're likely already doing. Further, just think of technical analysis really as a piece of the overall puzzle for you. Many pieces as we can put together to aid us in decision making. That's what we want to be doing rather than relying on any one single piece of data. And if you're new here, this is the agenda that we usually work through. It's a top-down approach. We'll start with our big, broadest of indices. We'll hit up the S&P 500, move into the NASDAQ 100, the Russell 2000 for our small caps, and then hit some of the extended areas of the market. Probably look at semis today. We have NVIDIA earnings on deck, and of course, some other groups, industries, sectors, etc. So plenty to cover with all of you today. Brent, let's start us off with that S&P 500. It wasn't that long ago where we were wondering if we could push through the 200-day. At this point, man, we have not only pushed through the 200-day, we've received the throwback move to the 200-day for what many would call a successful support test here.
Yes. So if you look earlier this year, we had, and you kind of draw a line around the 5750 level there. That was a potential support level there, the potential resistance that we broke through, but we bounced off that. And now we're kind of in that zone. Now, you could also draw a resistance level up towards the 6130 level or something, somewhere up there. That is, kind of up in that range. We're now in this kind of sideways channel. Now that's an upper resistance. We may hit some resistance below. I mean, just a week or so ago, we bounced off a level that could potentially act as resistance. But my point is, I think we're in this area where is this kind of the new norm for the market of where we're going to stay? I don't know the answer to that, but we have had a pretty big run up on that S&P 500. You can see that reflected in the RSI, by the way. Why are we in the upper ranges on that RSI? Well, we've had a strong run. That's what we've had. So that's we've had a pretty strong market here, and it seems to be most susceptible to news, and we're in a cycle where we have a lot of news, including a lot of kind of unexpected trade talk news that seems to shake the market. But right now, this is where we're at, and it seems like the market's fairly comfortable in this range right now.
Yeah, for the time being, I think
For the
you're
time
spot
being.
on. Depending on your time frame, obviously, if you find yourself in that 4 to 6 week swing trade window, bulls are probably encouraged by the action we got late last week. That Friday week open on the confluence of the 20 and 200-day moving average, and then yesterday taking out the high of the low day, which could tell us potentially that we're just continuing this long range, or excuse me, this intermediate term uptrend that we've been watching here, right? I mean, we've hit the manually drawn trend line a few times, but we've basically been above the 20 days since back here in late April, April 23rd, and have held it, tested it. So, for a lot of traders, Brent, the near term, as much as I pushed us up to that high at 61.30 to 61.40, there's that level right above us. It's 59.75
Yes.
or so that I think you called out that I missed when I drew this the first time. But if we get through there, then we start talking about, all right, wait, what's the next level? Well, we got to start talking about 61.50 all of a sudden. So obviously, Brent, we could pause at 59.70, 59.75. There's nothing that says we have to push through there, but it sure feels like the path of least resistance at this point is to the upside.
Yeah, the momentum's to the upside, the trend is to the upside. But one thing I would point out is like our trend line, the one you drew there in white, that's pretty steep. And the steeper it is, I mean, that seems great, but it's also harder to maintain that level of ascent
Sure.
for as long. At some point that's going to break. And so there you go. I mean, I don't know. You're right. We have a resistance above us. And of course, we were talking about a month ago of, valuations have actually kind of come back to earth on things. Well, you know what? We're back up to kind of frothy market valuations right now, probably. And so that at some point that can limit the market upside as well, probably.
Yeah, I think, obviously tonight's discussion around NVIDIA is going to have a lot to
Yes.
do with what happens with the market from here. It's not always that we lean into one report, but for a single company to have massive importance for us, today's report after the bell is absolutely one of those big ones, Brent. We don't
Absolutely.
really have a choice but to pay attention. I mean, they're in all of our major indice groups, so it's kind of an important company for us.
Yeah, since we had there was a couple days there where we had Amazon and Apple and Microsoft and Alphabet all grouped together. Since that time, this is the biggest report we've had, definitely.
Yeah, no doubt about it. So, all right. So if you're watching the S&P, one thing we know is that you've been given new levels to which you can raise some stop orders, some levels where you would be provided an opportunity to make a new decision. For bulls, if we get through at a close that 59.75, 59.80, they're going to stay optimistic and bullish. If we get rejected there, it might mean a little bit of a pause to this recent rally. And if we get back below the 200-day, bulls are going to be changing their tune and not feeling as bullish, needless to say.
Yeah.
Probably a level under which they start to tighten up position sizes, building more cash. So encouragement here is for you to have those levels, not those specific levels, but the levels where you want to be acting. How do you want to approach the market if certain conditions change, shift, if price action dictates? So let's move over to the NASDAQ 100. Brent, a little different picture here in the sense that we are almost already, I think we might very well be making new short-term highs here all of a sudden with today's move.
Yes. So we still have the kind of broader channel that we drew on the SPX, but that kind of shorter term resistance, which we still haven't pierced on the SPX, we're kind of right there on this. And, I don't know if the jury's still out as to whether we're going to stay above that. And we may know by the end of the day on that if we reject that. Again, you can see that RSI, now, there's trend up on that RSI. And by the way, just a little side note on the RSI. We did kind of peak up into that 70 level. When the RSI gets higher, that's not a bad thing. In a trending market, that just shows strength. In a more of a sideways market, then it can be more of a concern that we're kind of in the overbought area. So when you're looking at the RSI, I would kind of distinguish between RSI in trending markets and RSI in sideways markets there. But right now, all that's showing right now is strength. Now, we still have that potential resistance level we're right at. We'll see where that goes.
Yeah, we sure will. I mean, as you could see, this looks like a new short-term high, basically the highest we have traded the NASDAQ 100 since back in late February here, where we broke the 50-day moving average. But yeah, this is a wonderfully, I would say bulls are telling you this is confirming the trend. The fact that we got the RSI into overbought territory on the last rally stands out to a lot of traders. It's confirmatory in nature. And of course, if we do make a new high close here in the NASDAQ 100, odds are strong that over the next day or two, that we're going to see the RSI follow through. Now, of course, Brent, if by some chance NVIDIA's report is less than stellar, and that would be a change, by the way, I think they've exceeded earnings expectations 10 consecutive quarters. So it would be a bit of a surprise. If that were to occur and we don't get we get a rejection at this level, the one thing that is likely to stand out would be a lower high in the RSI at a rejection zone. Now, again, I'm not suggesting that's what's going to happen, but we have to be thoughtful about what could go opposite to or counter to our thought process, right? We got to think about it.
Yeah, and that's not a remote possibility either. The NVIDIA earnings will, I mean, I guess I can't guarantee it, but will likely move the NASDAQ significantly, one way or the other. I don't know which way there. And so not just the bottom line number. I mean, as you mentioned, about 10 quarters in a row, NVIDIA's beat earnings. But it's kind of, the market kind of shrugs that off to a certain extent, because it's like, yeah, you're going to beat earnings again. It kind of gets like expectations for it. So more so than just the bottom line beat miss is going to be the commentary around the other numbers around NVIDIA earnings that are likely to push that market. And NVIDIA is, you know, the biggest semiconductor. It's going to huge tech name, which is half of the NASDAQ. It's likely to push this up or down. I don't know which way right now, but this little resistance we're looking at right now that we're at is likely going to, you know, that's probably not nearly as significant as what NVIDIA is going to come out with.
Yeah, I'm afraid you're right. 21,500 is where we reside, everybody. You'll see my white line that I drew in for the highs of the last week and a half here, and we're through it. Here we're running into R1. A good open versus our pivot down here at 21,330 approximately. Certainly moving through R1 with any conviction on an intraday basis here would be fantastic for the bulls in terms of development. So see if that plays out. But hopefully the walk away right now is you've got some levels like we do on the S&P where you could start to make some decisions if things did change or if we made new continuation moves. Want to have those ideas as to where you want to start raising stops and taking advantage of the market's move to the upside, if that continues, that is. So how about the small caps? Brent?
Yeah, let me just address one quick question here.
Oh, please, go ahead.
Just to clarify something in the chat. No, NVIDIA is not half of the NASDAQ, but tech is about half of the NASDAQ, and NVIDIA is a big part of tech. So just a clarification on that. And we've been talking about NVIDIA. George looked it up for us. Thank you, George. Expected NVIDIA move on earnings plus or minus about $9. So that's significant on NVIDIA there. But we can get back to that later.
We'll look at that. Yeah, we'll pull that up and talk about the implied move, the potential for the move.
Sounds good.
When we get into individual equities, everybody, that's a great idea. Okay, Brent, when we're looking at the small caps here, obviously the biggest discrepancy is the S&P, the NASDAQ 100, both reside over the 200-day moving average. Here we are pretty far below it, but there's some important areas. When I look at the setup, the visualization of this chart from March through today looks pretty notable, and I'm guessing you see a lot of the same things, but I'm going to let you speak to what you see on the Russell, and I'll draw my lines in as you do it. What do you see in here?
Yes. First of all, let's go a little broader term. Let's start all the way back in November, December time period with those highs there, because I think if we connect those highs down to our highs there, we got that line. So that's kind of the longer term view on that. However, we've been going up, and shorter term, yes, we've been trending up. So you can go below the lows from our low in April, up below here, and we're kind of in that range there, kind of bouncing. And
Yeah.
you can draw that either way there on that. But the trend is up. We're above that 20-day moving average. But we had a high in March that we bounced off of right there. Yes. And that is kind of, to me, a very relevant area here
Mhm.
on this rut chart here. So that's that we'll see where we go from here. And those are I think the most relevant support resistance lines I would consider there, Kevin.
I think so too. This 2110 to 2120 approximation here, very, very important. Isaiah sees exactly what I'm thinking. Perhaps the inverse head and shoulders. If we cleared,
Yeah.
for example, just from a visual standpoint, let me clear this one. This could be your inverted head, right? So we got a bottom. This looks like a left shoulder,
Yep.
and then potentially a right shoulder over here, which, if it were to play out that way, tells us a lot about this 2115 level, because then traders would call this our neckline. And in order for this to be a validated inverted head and shoulders, the indice here would need to trade above on a close 2115 or so, taking out this white line. And doing so, Brent, with conviction would be ideal to really validate the opportunity here. We haven't done it yet. And there's a few things that stand out. This is the highest level we had traded to on the bounce. So not a surprise to see that we paused there, had to make a higher low, which we have done. But positing as to whether we're actually going to break through the neckline to the upside or get rejected at the neckline and see a new move to the downside, as well as I do, we can't predict that. But what we do want to do is have that plan. If we close over 2120, what steps will the trader take? What happens if we get beaten back at the rejection line there, and we have to come back and test 2000? We've talked about the importance of 2000 as the level on the Russell here, Brent, a number of times. And if I pulled back the curtain a little bit, here's where that 2000 resides, everybody. You remember those peaks we saw back when, where it was running us into resistance until it wasn't? Well, once more, that's the same level, Brent. The traders that trade the rut don't forget about that, do they?
Yeah, and sometimes, in addition to seeing that level on the chart, people attribute extra importance to kind of these big numbers, these big round numbers, like 1,000 or 2,000, or if we're talking about lower prices, 100 or 200. And so that's kind of this psychological level, so to speak, on the Russell 2000. So it is a key level, and we'll see if we hold right now. It seems like a decent support level. We'll have to see what happens with that head and shoulders, inverted head and shoulders, as to whether we break out on that. But if we go down, that is the key level, and that is a relatively bullish pattern. That inverted head and shoulders.
Oh, yeah.
It's just it hasn't come to fruition yet, so to speak. Although we have the setup for it.
Yeah, and that might be the biggest reminder, right, Brent? I mean, we can't call it a pattern until it develops as such, and we can't suggest that it is that until we have a close over the neckline. So that tells us why we are watching these levels. Hopefully, that's the takeaway for everyone here, is that where we're going to be paying attention, and remind us that, of course, intraday moves can be opportunistic for you, but they could also be head fakes. And that's one of the reasons traders will wait for closing values there to a certain extent. So just something to bear in mind. Let's peek in on those semis. I mentioned the NVIDIA move, expectations, and semis have improved rather rapidly as well, Brent. If you choose to evaluate this similar to what we saw on the Russell, boy, we did clear an important level here recently. And with yesterday's action once more, trading above the high of the day in our pullback. Could this be the beginning of the continuation of the strength in the stocks that we've seen over the last couple months here now?
Yeah, so we'll see on that. And again, I hate to keep bringing the N word, the Nvidia word in our case today. That's likely going to move this significantly either to the upside or the downside here. But we have that nice trend. We're right at that 200-day moving average. So we'll see what goes from there. But hey, that's a nice little flag bounce there. And normally, excluding any, other news, extraneous news on the market, we'd consider that to be a pretty bullish breakout. I would consider there in terms of a flag.
Yeah, I'd really be hard pressed to argue with you. I think the trouble right now is the distance from knowing or having confidence in the move, meaning an exit strategy probably means you got to trade under the low we created on Friday, which means your risk is somewhere in the neighborhood of 200 SOX indice points here, everybody. Your upside, is right around 5,000. It's about 150 away. Risk reward doesn't quite favor anyone here, bullish or bearish. So, at least knowing those levels, if you're talking about continuation, you'd feel a lot better with a close over 49.75, 5,000 or so if you are bullish. Of course, if you're bearish, you want to see the rejection at the 200-day. You want to see us moving nearer the 20-day. And then ultimately, you want to see a move below the 20-day. That would be the most short-term significant because, Brent, once more, we've been above it here for going on 5 weeks. So, again, be thoughtful about changes to trend. Sometimes those changes need more days to validate or develop. And for many traders, that first close is below a major area of former support can be that indication that it's time to start lightening up. It doesn't mean the trend necessarily breaks. Many of you use confirmatory details, 2 or 3 closes below support before you start moving out of your trades. But whatever that is for you, make sure it's well defined so that you can come to a decision in the moment rather quickly, and you have the basis for making a good decision as opposed to a hasty one. That's what the whole concept about planning is all about, if you ask me.
Yeah.
Okay, Brent, what else? Anything else you want to share or think about as it relates to the SOX, or should we move on to some other areas?
Let me just mention one more thing. The
Please.
SOX is up, I think, if I remember, about 44% from its low there that we hit in early April. That's a massive move in just a little less than 2 months time.
Yep.
So, the SOX semiconductors have been, let's be frank, kind of disappointing over the past couple years here. But hey, it's 44% is nothing to sneeze at here. So we'll see where we go from here. But this can certainly help boost the market.
Well, Brent, perspective is everything. I would be hard pressed to disagree that it's been underperforming, but the underperformance does stem from this incredible move that we got from late 22 to the peak in July of just last year. And notice there was 184%. Really hard. Everything needs a little bit of perspective. And so, yes, we've given some back. And maybe it's been a good enough rally that we've set some new levels. That remains to be seen. But ultimately, big moves to the upside are frequently followed by big digestion zones for those prices. I think the action that we've seen here since March is the part that's most concerning for the majority of traders. Everything that was going on back in here probably felt pretty standard after a significant upward move, right, Brent?
Good. It's a good reminder, Kevin, because I don't care whether we're talking semiconductors or oil or gold or whatever. When something has made a kind of a meteoric move up, then you need to be prepared for kind of extreme pullbacks too. And that's what we've seen. And, sometimes you get caught in the market moment and you think, well, hey, whatever you're looking at, it's going up and it's going to stay up that way forever. And, I remember one of my first investments ever. I was a very green trader, and I looked at the past performance of something that was just super hot. And I thought, oh, it was hot last year. That's where I want to put my money because look, it made, I can't remember exactly, but 40, 50% last year. It's going to do the same this year, surely. And of course, you know what happened. I get into it and it goes way down. And that was it shows the ignorance on my part there, but it was a good lesson. It was a good lifelong trading lesson on that. So whatever you do, have a plan I know we beat that to death so many times there, Kevin, but whatever you do, have a plan. The good times won't last forever. Similarly, the bad times usually don't last forever either. But that's why you have these levels that you got to consider your action at.
Yeah, I agree, and I'll just reiterate your point. The idea that that we can all, I mean, many of us are capable of doing so, learning from others' mistakes and understanding of the markets. Many of us, on the other hand, myself in particular, I needed to see all of that play out in real time. I needed to watch these examples that I read about in books play out, and I needed the visual and the experience in the market. And if, in all honesty, I needed the monetary loss to teach me those lessons. My hope is that our conversations here keep you from having to take those monetary losses to learn those lessons. It's a hard process. I think that it really, really is solidified when you learn from your own experience in the market. But if there's any way that you can learn those lessons and take them verbatim from the books into your real world trading, that's a real positive step for you if you can. So hopefully we can avoid making those mistakes and losing money to teach us our lessons. But for a lot of us, that's been the process, unfortunately. Okay, Brent, I'm looking around at our sector action here. I see we've got some leadership this morning in communications. We're up about 1/3%. I thought we'd peek in on that, which continues to run a little bit here. We moved through a zone of support and resistance, former resistance, now support. Hey, we didn't even let the 20-day get caught up with this most recent move here on this sector, did we? Look at how that 20-day is trying to get caught up with the bull flag that we just broke out of here. Communications looking strong.
Communications is looking strong. It's one of those, I guess, kind of risk on sectors that we have. And so it got hit pretty hard when the market was going down, but it's been one of the top sectors here of late. And we're still, even after today's big move, we're still up today. After yesterday's big move, we're still up today here on that.
Yeah.
So well above that 20-day. You can see that RSI up, getting close to that 70 level. That's not a bad thing, remember?
Yeah, more confirmatory in nature than anything else. So nice to see a little bit of strength. I also wanted just to point out that the weakness is coming from those groups that we would expect to be defensive in nature, from a standpoint of allocation. If consumers and traders were a little uncomfortable, you would expect to see utilities doing better. Today they are not, so there seems to be a little bit more comfort with the risk on scenario, even though utilities and real estate have bounced back kind of nicely here. The rate environment certainly having a play on these two in particular. But the other area I wanted to look at was discretionary. Now it's off a little here today, but again, this looks pretty intriguing for a lot of traders because of the levels that we've bounced here. So this resembles to me the S&P move, Brent, recapturing the 200, pausing at an area of resistance, getting the throwback, and then the rebound, and then the bounce off the throwback. This looks, again, bullish in nature for short-termers and extended in nature bullishly if we can trade above 1740 here.
Yes, so key level. We also have some earnings coming out here.
Yes, we do.
Yesterday, Dick's, Abercrombie Fish, Macy's. Today, we have more earnings. We have Kohl's and Gap and American Eagle and Buffalo Wild Wings and Burlington Coat Factory, I think. Tomorrow, we've got Costco, which is probably more staples, I would guess, but Ulta, Gap. So a lot of individual companies that can push the discretionary area around
Yeah.
here. But from a technical level, you're spot on with what you said on that.
Let's just look through some of those symbols because I know our viewers love to see individual equities. You can see here that Dick's has not had a wonderful reaction to the earnings. Now, it did bounce up, but it has sold down. So it is 1.75% up. But the notable thing on this chart, Brent, might be the double bottom here that's potentially set up. When you see that double bottom, what else stands out to you?
Well, you know what stands out to me, and not so much with the double bottom, but you know, it's weird to say that a stock that's almost up over almost 2% looks kind of bearish, but that's what it looks like right now because of that candle. We're right near the low of the day and have a big candle on that, and that was, you know, kind of we tested the downward trend line on that, so we bounced off resistance coming down now. You know, we still have a valid support level on that certainly can hold, but that's looking a lot like a descending triangle right now, Kevin, and that, you know, generally that's a little bit considered to be a little bit more of a bearish pattern. You still have a valid support, but that's not looking great right now.
Yeah, not the best setup. Now the question becomes, hey, are bulls telling a different story? Are they going to try and tell themselves, well, we've got that RSI bullish divergence at the low we made just yesterday and Friday, you know, which would possibly suggest to some that that low can be maintained. And yet, you're right, Brent. There's nothing else on the price action that will give you confidence here. You know, trading through the 20 and 50 day there at around 190 would be something that would change things, perhaps. But yeah, I agree. The trend is certainly short-term bearish for the last 5 months or so. Force the trend to change is kind of the thought process that a lot of traders will take on there. We did hear from A&F Abercrombie. Now that's a little different, Brent. You did get the big move to the upside, fading a little, but my goodness, a 25% return after the fade is not ugly.
Yeah, so I wanted just because we're at the low of, you know, our current price is below our low doesn't mean it's bearish like I was kind of indicating on the last one. Here, right, you're up 25% for the day. A little sell-off is probably expected on that. So for a lot of traders, you know, when the dust settles for the day, it'll be interesting. That low price of the day after that gap, will that hold going on into the next few days? Because it can be frustrating when you say you're a fan or you're interested in the stock, you've been waiting, the trend is down, then of course earnings comes out and you go, well, did I miss my move because it's moved up so much? Well, one approach that traders use to get in that is they'll take the low of after the gap, so at the top part of the gap there, and they'll consider that to be kind of a support level. And they'll use that and they'll key off. You can put a stop level, even though they're not guaranteed, below that level and see if that'll hold. And that's a potential entry level that some traders will use after you get a big gap like that. But we don't know where the low of the day is yet on this.
No, we really don't. I think the last takeaway for me is just kind of making note of the fact that the stock had done much, much better over the last 2 weeks leading into into the headline. You know, this bottoming pattern all looks very similar, except for what had gone on since this. And that move, you know, gapped higher, let the 20-day get caught up. Our pullback was to the 20-day. Now you've got a 20 ready to cross the 50 to the upside. I know that that's going to look a lot more obvious today, but there's been some improvement here over the last 2 weeks in terms of price action. So certainly, you know, with headline risk, it's never perfect by any stretch, but things were at least a little bit improving over the last few days there. Brent, you also mentioned Macy's, I think. Let's just quickly peek in there. Macy's earnings didn't, one of those, again, that just not as wonderfully received. This one, unfortunately, flipped. So we had a bullish open that has now since turned bearish, Brent, after opening right at basically what many would say is resistance.
Yeah, and so that's not great. I mean, you do have some higher lows there over the past few weeks, but we have that resistance, which when you go up, the more times you hit a level, support or resistance level, probably the more perceived strength there is in that level. Well, we just gave some more strength, if you will, to the resistance level in that case, because we went right up to it and bounced off it.
Sure did. Sure did. Hey, I see we have a survey in the chat, everybody. I don't know if you all saw it, but I know Barb has reposted that a couple of times. If you guys would be so kind, we would greatly appreciate your feedback, everybody. You can click that link very quickly. It's going to open in a browser window right next to this one, and then you can get to it post-show. Just give us a score if you'd like. If you want to make some comments, some suggestions, some things you'd like to see done differently in terms of how we handle Trader Talk, please let us know. Your feedback comes directly to us, so we would absolutely appreciate that. Brent, let's see. We also said something about, gosh, you were right. You were hitting all the big ones. Best Buy today, Burlington, Foot Locker, and Kohl's, and Gap, and American Eagle, and then tomorrow Costco and Ulta, and American Eagle. Yeah, some good stuff. So let's look at Costco here quickly.
Yeah, Costco's a bit, I mean, it's not as big to the market as Nvidia, but it is
right.
a big company in terms of the ones we've mentioned here in terms of retailers. Costco is definitely the biggie.
Yeah, what a interesting chart. You know, the trend is certainly bullish in the longer haul. You've got a few instances trading under that 20-week where we had been for a very brief moment, about 3 to 4 weeks there under the 20-week moving average, and then right back up above it again. So some reminder once more that trend analysis over the longer haul can be really instructive. And I'm just going to call it out because it's on the chart, Brent. I'm always looking for a good teaching moment. And the one that stands out to me here is this consolidation in the midst of what was already a wonderful uptrend, Brent. Look at how fantastic that was.
Oh, yeah.
Where we had moved real aggressive, mind you, from about 300 to this peak. We basically doubled from here to here. So this was March of 21, it looks like. And then we peaked in basically a year later. And then we underwent this consolidation. Well, Brent, one thing we know about consolidations in the midst of trends is that they tend to resolve in the direction of the trend in which it came in. So in this instance, when it broke to the upside, it went from consolidating and digesting all of that big move to the upside. It then started trending right thereafter. And I just can't get away from it because it stands out so obviously on this chart, doesn't it?
Yeah, it sure does. And it's just kind of a testament to the strength of Costco. They've done things right in terms of a company, in terms of rewarding their shareholders. And after you get a big move like you did in 21, I guess, you know, you end up with consolidations. I don't care what stock it is. You end up with, they have pullbacks along the way. And that breakout, sure enough, since that time, we've doubled. That's after the breakout, we've doubled. So
Exactly.
That's crazy. Yeah.
It's pretty incredible, isn't it?
Yeah.
Yeah, I love, and again, you know, you could see this on the pages in a book, and knowing that this consolidation commonly leads to trends once broken, that's the thing that you probably need to see in the wild here, so to speak. That's what will give traders that confidence that what you've seen before can happen again. These instances, when I come across them, I just have no choice but to bring them up, because in this instance, once you broke that downtrend line, it just kind of meandered for a couple of weeks rather, since we're on a weekly. And boy, that 20-week on a close was held all the way until March of this year. That was an incredible move along the way. So just have to point out opportunities to discuss learning objectives whenever we can. So that was kind of a cool looking chart. And then let's go ahead and take a peek at NVIDIA here for the masses. Brent, we can talk about the pattern, which again is resembling that of the NASDAQ 100, the S&P here at the top of our zone. But once more, Brent, once we took out the downtrend line here, kind of notable, huh? Because all we've seen has been upside since then. So nice little bull flag set up here over the last 2 weeks or so, huh?
Yeah, nice bull flag setup. You can see that RSI has climbed, and hey Kevin, let's show people where you can find the expected move on NVIDIA, because
right.
George put that in the chat for us earlier, but that's good for everybody to know, I think.
Yep. So I've got everything closed here, everybody. We clicked on trade, which in our case is linked directly to our chart. So everything that I click through is going to be linked up rather easily. So we move into the trade page. We're on NVIDIA already. We're looking at the various series of options available over the coming weeks. And we just slide to the right here. And that's what you're getting out of this, is the implied volatility, or what some would call, Brent, the market maker anticipated move here. $9.80 on the $135 stock. And that's the expectation of move between now and Friday expiration.
Yes, and that is, notice there's a plus or minus in front of that. So that's not bullish, it's not bearish, that's kind of the range, and that'd be like a one standard deviation move channel there. So it certainly can go more than that, no doubt. But that just gives you an idea on those. And so that, I mean, that's a significant move on a stock that's a $135 stock there. But so there we go. I think it's in the future, everybody may be interested in looking at that on various stocks. How big is that going to move after earning? Well, that's the statistics of it. It's certainly not a guarantee, though.
Yeah, that's right. And I always like to take those dollars and set new levels. So if we're expecting a potential $10 move and we're trading at 135, you might have to see it at 145. That's a theoretical upside target, and theoretical downside target 10 points below it takes you down to about 125 or so, all of which could mean that really nothing happens from a trend standpoint, right? Because, Brent, if we maintained the 135 as our peak, even if we had an undergo a bit of a pullback or a negative report, but it holds the 200-day and the 20-day moving averages both, a lot of traders would call that an opportunity for joining the trend that's been in play, even if the earnings aren't fantastic, or if commentary leads to a weaker price action following tonight, for example. So trend has everything to do with it, right?
Right. And so that it is interesting to match up this is kind of like a probability trading approach with a technical analysis approach of support levels, resistance levels, and they're kind of lining up here. They're kind of matching up here. And so if we pull back and then bounce off that level, then it's not a serious break of a kind of a key support level. Of course, we're not limited to the $9 move either. It certainly could move more than that.
Oh, absolutely. We know enough to know that much. One other thing you might consider, everybody, is just adding implied volatility as a measure down below. You'll see that the volatility on this has changed quite a bit, mainly because of the conversation around tariffs early in the month of April, where we got a huge spike. But, relative to where we are, that shows a 0.55 on the IV for the report today. Last time we had the report, the IV was as high as right around 7.5, right? And the times prior, it's been higher. So there's some comments in the chat about what to expect. Obviously, we don't necessarily know, but you could see that the implied volatility is lower than it has been. Commonly, you can see, I did the math. It comes out to about 7%, Brent, is the expected potential move. It's not as huge as we've seen. We've definitely seen NVIDIA's move potentially be as high as 10, 11, 12%.
And I'm just speculating here, Kevin. I don't know. I wonder if the lower potential implied volatility move is because maybe there's just more uncertainty in terms of let me restate that. There's less that's going to come, that may come out of earnings in terms of the future, that is going to potentially impact the stock. I'm just kind of speculating here on this. In other words, there's a chance they'll say their stuff, but the reality is people are just still going to be going, well, look, it's that doesn't even tell me, because we don't know what the future of trade policy is going to be, and therefore it seems the markets, the stock may not move as much because of what comes out of earnings. I don't know. That's just pure speculation on my part as to why it may be a little bit lower.
Yeah, it's true. We don't know. We could all have our opinions, but they're not worth a whole lot as it relates to the market. Unfortunately, the market's going to do what the market wants to do. That much we know. So yeah, there's always an opportunity, but you can keep it tuned right here to the channel, everybody. We've got more to come for you today in terms of the market, what's coming here and what could be done. You can always keep it tuned right here. So take a minute and follow the three of us on X. Make sure you subscribe to the Schwab YouTube coaching channel. Big thanks to Barb in managing things. And of course, we had that survey opportunity today. So we'd love to hear from you, everyone. Go ahead and provide us a score and comments if you're interested in doing so. Those are greatly appreciated. So we'll wrap it there. Hope you all have a fantastic rest of your Wednesday. And we look forward to seeing you all again real soon.